Welcome, friends and traders. Let's work on the wave technology of reflection. This is simplified version. As time progresses, you will see some quantum Tesla vibrations showing up in the next level of tools. But right now, what we are looking at is a straightforward structure which we can use to on daily chart analyze the situation. So what we have is a daily chart of ES. Remember, daily chart I said. And then we have, you can do it on stocks and everything else, on QQQ or SPY, ETFs. You can do it on indexes. You can do it on futures, but keep it on daily for now, and you can do it on weekly. Daily seems to be a good balance to do this. So the tool is 369 level 1 PP price bands, and it will keep you on the right side of trading and the direction and the reflection points. And we are going to use market ranges of these bases and reflections as measured moves. All right, that's all there is to it. First of all, you need to understand the impulses, right? What is an impulse? And is this impulse, or this big one is an impulse, or this huge thing is an impulse? So if I ask you to find me a big impulse, you may not understand, or you do understand. There are two probabilities. So let's assume that you don't understand. For those folks, what we are going to do, we are going to look at the moves which are going off these bands, and you're leaving the bands and then coming back in the bands. So let's take that rule. So for example, market started from inside the band, left the band right here. So let's assume this is the impulse, right? We have a law. So structural laws need to be followed. And how about here? Market is inside the band, it rallied and left the band and came back inside the band. So this is also a structure. This is also a structure. Impulse structure. From here, this is impulse structure. From here it left. This is also impulse structure. This is also impulse structure because the endpoint has to be one which brought the system. This one almost touched it, but that's fine, right? And this is also impulse. From here, this is also an impulse. You understand. So starting off the base, we are off the bands and we're coming back in the band. The pivot which does this, the pivot which produces this is the height from the beginning, the base to the apex. That is what we call as impulses. So I'll take the impulse. I'll measure the height of the impulse. So I'll keep these impulses in action and in conscious states of my analysis. So this is what it is. And we don't want to do 20 impulses either, right? We just want to keep the major top. Remember, we have been talking about keeping the top 3 and 5 things. On the frequency waves, people who have done a level 1 and level 2, they know what the frequency endpoints are, how to build them, how market makers and banks build them, right? All right, so I got my impulses. Now if you see, I got one impulse move, I got second impulse move. I have 3 impulses right now active in the system. And I just showed you how to do it. So let's delete this. You got the idea, just to give you the idea itself. Now you have been watching these impulses go off the long-term VWAP based moving averages, which we have been doing for a long time. All right, so when the impulses are produced, we can put them on where the market might be going. Right, this impulse is already done. When we get a pullback and we say, okay, market might be heading here, and we got that. There might be other impulses. Now we want to go back. It should not take more than maybe half an hour for you to go back last 5-6 years and find all those impulses and find the biggest one of interest, the top 3, top 4, top 5. That's it. You keep those impulses and keep on running. So from here it went up, from here it came down, right? You're getting all these impulses. You can also double the impulses. It went here, right? So from here I put it here, so it is ending here, so I put it on the top, it ends here. So you're getting all the swing points you ever need. All right, so you got all the impulses, right? What next? So if I put it from here also, I'm getting the same impulse location. Doubling from here and singularity from here is emerging here. Let me do it right here and here. Let's leave it alone. So what we do, we put the line there. So once we have the line there, we're gonna see how things are behaving once it gets there. And again, this rest is all tactical trading right here, impulse again. So there are two impulses pointing this in the same location. Now this is chart of ES. It moved down 700 points, 600 points. This is where you make money on options. Hedged it, you know, hedge it also. Tactical trading, we cannot talk because you have to talk to your brokers, you have to talk to your certified advisors. This is just the structural, mathematical, structural analysis talks we are doing, right? There are some laws around it. You work within the laws, within the recommended risk profiling and risk managers, right? And from here, this is impulsing. You picked up the world's highest high based on just impulses, and this is how we did it when we said market is going here. All right, you got it. So now this is a one big impulse. I'm looking at the most recent impulses. Now market is now going to crack. Now this there's also slope going on. If you remember, again 45 degrees, he says if market is moving at 45 degrees or higher, it just pullbacks are just longs only. Eventually, this whole year was bullish, and after the election and then all these tariffs and everything else, there should be some catalyst, some trigger which triggers it. Now it is moving down. So what we do, we look at anti-impulses, right? So right here is anti-impulse, and you took the profit. What else can you do? Let's double it. And you picked up the ultimate bottom for the year. And this is how we did it in the videos as well, using VWAP, but this is acting like a VWAP. So that is how you use it. You cannot be scared of trading. If you want to be in the market, you have to hedge it. If fear factors are there, learn to hedge. There are 9 ways to hedge the market structurally, and 9 ways to participate in the market, right? If you want to be, as I said, there's an amazing book called Zurich Axioms, run by the Switzerland bankers, right? The families who run the money, run the show. And I think that applies not only to trading, investing, multi-generation wealth generation. It might be worth spending $10 to get that book, Zurich Axioms. All right, so if you are following that, let's say you are going to invest in the wealth, or like 4 or 5 elements you have picked up, and then let's say this is the element you want to pick up long term. Or you can do the same thing in stocks too. Just find the rhythm. Market is telling you what it needs to do. All right, my friends, this is what this tool is designed to do. How about this big boy impulse is here. Now if I do it from here, right, or do it from this. Now remember, one thing also we talked about is if you just keep on tracking, right? We talked about that also. Okay, so this biggest impulse is what we have seen so far. Is you can just see where market has moved. Let's go and check a little bit. All right, so see this impulse on the bottom, and from the bottom, right? So it picked up the bottom. Now same impulse, even though we measure from here, this impulse is already known to us from the band, and we can just do some analysis. It picked up this high, from here it picked up this high, you already know that, and from here you picked up the ultimate high. Now you can put it on this the very long impulses, you can put on the fat line also, or the price will get you close. Now on the break, when the break happens, When the break happens, big impulse. You can do it on the top, or you can say, hey, if it breaks, remember we talk about three things in the course. One is to use the apex points, the tops and the bottoms, and sometimes we say use the, remember we're dealing with probability here, not perfection. So from the break also we do. Now this break is not a trend line breaks. There are three trend lines in the system. Remember, everything is 369. There are three trend lines. So now one thing is from the top, where are we going? One thing is from this small impulse doubling X, right? This one reacted. So why will I trust this? Because it reacted. It reacted from here. I can trust a double exit right here. Keep it here. Now I need confluence of event. This guy is not meeting there, right? This guy from the top, market came down, it went up and came down on the reversal from this coming down. Let's zoom in. On this reversal coming down, then it respected this, right? So when I I put it here, I don't know. Okay, so I say, okay, what can, this is one element, or how can I get two elements? So when the market is cracking below this, I put it here and the crack also. Now I have confluence and convergence. You see that? How hard is it for you to become a certified market technician? You just do the course and you're good to go. Wall Street awaits you. All right, there it is, my friends. Now we already gave you the targets. Watch the previous video where we are heading. Watch the targets. What do you have to do? Same thing. Do it on the other side. Remember, you got to work with your professional traders or ecosystem. Now see, this impulse is working. It reacted from this. I put it here, right? Put it on this. You know where it is going. Put it on. So this is how it is. Now this impulse, we also can see, is this a new impulse? Or this is same impulse, a little bit different, right? We can adjust the impulse a little bit, almost there. So I'll just keep it. So if I put it here, we got some reaction. We already got that reaction. From here, there it is. All right, you know where they are going. So this is how you use the bands, relative impulses, because, and then other thing is you can use our oscillations. We have oscillations of the astro oscillations, or we can just simply use the other oscillations. We have three oscillators, right? World's best. You can use that, but try to do the basics and then add oscillations. Thank you so much. There's nothing much to be said here. Appreciate you a lot. Thank you so much.